Welcome back. The stocks of the day today would be the Tata Group stocks. The board of Tata Steel has approved the merger of 7 Tata Group metal companies with Tata Steel. Listed entities include the Tata Steel Long Products, Tinplate, Tata Metaliks and TRF. We have 3 guests now joining us. Anand Tandon is joining us, a market veteran. Rakesh Arora of GoIndiaStock.com and Vikash Singh is joining us from Phillip Capital. Gentlemen, good morning. Anand, you have tracked this company for better part of last 3 decades. Sometimes I fail to understand what they're trying to achieve, but what's your view on this restructuring exercise that's happening now?
Sense for the metal companies to be together. I mean, perhaps it was an incident, a case of a different era where you had licensing and different kinds of issues which needed multiple companies. In today's environment, all that is not there, and there is absolutely no reason to have multiple businesses which are in different stages, especially given the fact that GST impacts and taxes will actually cascade in some of these cases. So, to my mind, it makes perfect sense. The only question is of timing and the ratios that you will get, and I haven't had a chance to analyze that, so I don't think I can seriously comment on whether all of them are being amalgamated in a way that protects the investor, the minority interest of investors. But otherwise, I think from a strategic perspective, it makes good sense.
I mean, actually, Anuj, so I've always wondered, right? So many companies listed, you don't know which is doing what. I mean, for the uninitiated, people who are tracking a particular company, that's fine. But I think I completely go with what Anand said in terms of just have one company. Anyway, all subsidiaries, all results are consolidated.
Exactly.
And I think it simplifies the business as well.
Absolutely. Right? Rakesh Arora is also with us. Rakesh, good morning. You tell us, especially for Tata Steel shareholders, what does this mean? Good news?
So it's a long-term positive, as you guys have been discussing, that it cleans up the structure. But I think there's also a necessity to do this. Having acquired Neelachal Ispat and the Tata Steel Long Products, they have to make an investment of around $10 billion over the next few years. And there's no way Tata Steel Long's balance sheet can support that kind of investment. So either you have to infuse equity into a subsidiary and keep on increasing the holding company discount. So it doesn't really makes any sense. So probably they wanted to merge Tata Steel Long and then they cleaned up the whole thing. So it's long-term positive. Looking at the ratios, swap ratios, etc., I think market was aware. So most of the stocks are around that swap ratio, except for TRF where there'll be a big downside. So in the short term, there's no major benefit. Long-term positive and a necessity also, I would say.
Okay, Rakesh, good morning. Just one follow-up. For a company like, say, Tata Metaliks, right? I mean, it does get higher valuations because it's in the ductile business. Now that it's being merged into Tata Steel, for a Tata Metaliks shareholder, if I wanted to be in Tata Steel, I would have bought the Tata Steel shares, right? But now, as a Tata Metaliks shareholder, what do you do? Do you expect that stock to be under pressure because of this merger? What is the long-term outlook here?
No, so basically, see, Tata Metaliks was taking iron ore from Tata Steel. So there are a lot of related party transactions. A part of, profits are going from Tata Steel to Tata Metaliks. So I don't think there's any, major change for Tata Metaliks shareholders. They are better off with Tata Steel in the long run.
Okay.
I mean, Rakesh, in a longer term, you need fewer. Operationally much easier, right? Fewer bank relationships and all kinds of things, right? I mean, operationally much more simpler. Would you reckon it amounts to not a very large sum in terms of savings annually for the group, or you think? I mean, tough to estimate, Rakesh.
So Prashant, if you look at the minority interest of Tata Steel, it's around 1,500 crores a year. So that's like 7-8% of the profits. So it's not a big deal in terms of minority savings, etc. And there will be a little bit of savings from the administrative and overlap of functions. But see, already these companies are working like, different business segments, though they are different companies. So I won't really expect too much savings, but, as we were discussing, it streamlines the process and it streamlines the structure and also helps in treasury management, etc. So definitely there are long-term positives here.
Okay, long-term positives here. We have Vikash Singh joining in as well. Vikash, do you concur with Rakesh's view that long-term, of course, it's a positive, there are synergies, and some of these smaller companies are sort of, shareholders are better off, you know, that these companies get merged eventually into Tata Steel. Is that your view as well?
Hi, good morning. So just I want to add one more thing. So from the near-term perspective as well as a medium to longer-term perspective, one obligation was also from the point of view that the MMDR Act has been changed. And Tata Long and Tata Long products as well as Metaliks was paying 22.5% additional premium on the iron ore, which has taken a big hit on the profitability side also. Since they have a plan to develop Tata Long products into a 10 million ton company over, and the iron ore would be supplied from the own mines, that is a 22.5% additional premium would have been a big consideration on the profitability side. So that is what I believe would be the long-term benefit for the company. Immediately, we don't see anything on a financial point of view changing, and as well as not much arbitrage on the smaller companies in terms of swap ratios.
Absolutely no arbitrage except that TRF goes down. Rakesh, now since we have you with us, what's your view in any case on steel stocks and Tata Steel in particular? Because we had a massive rally, then a big decline, but over the last 1 month or so, we have seen some bit of rally once again, especially in Tata Steel.
So, Anuj, steel prices after correction from 77,000 to 56,000 have now stabilized. There was a little bit pop coming back in coking coal, which is supporting the steel prices. But I don't think there's going to be any massive rebound in steel prices in the near term, because global situation is going from worse to worse. So I think markets demand restriction is much larger than the supply constraint that we are seeing in Europe, etc. So I would say that we have reached to a neutral territory. We are not yet positive at these levels.
Okay. Anand, what about you? You know, in the last 6 months, Tata Steel has lost, what, 25% of its value. Prices are under pressure. Demand is under pressure globally as well. Do you see any respite in the stock at all? And for the longer term, what's your view on Tata Steel?
Well, I've always tended to treat commodity stocks as commodities, so they are cyclical. You buy them when they are really down and out, and you sell them when they go up. So I would imagine that we've probably seen the peak in terms of prices. It may recover, as Rakesh was saying, a little bit, but given the global situation we are in and the intensity of interest rate hikes, I do not expect the demand will sustain even globally. So consequently, I think the price has peaked out. You're not likely to see a major. The best you can expect is that profits will kind of sustain a little bit in the region that they are currently, which means that from a stock market perspective, you could ease off considerably from these sectors.
Okay, fair enough. Vikash and Rakesh, thanks a lot for your time today and discussing this this development. Anand, of course, we'll have some more questions for you. What about IT, Anand? Because we've seen a sharp correction. Accenture's numbers are almost in line, but the big worry is what's going to happen this year, because last quarter the worry was about margins, and now there are some worries whether top line itself would be under some pressure, and what happens to the valuations here on. Your views?
Clearly, margins will be under pressure. Even Accenture has, against what they guided last year, it has been a significant downgrade in terms of the guidance. So while they have done very well, it is likely that this current year will not be as good. And I think that is what the market is also priced in. You've seen almost, as you mentioned, almost 20 plus correction for most of the frontline companies. Given that we are now looking at a scenario where interest rates will be moving up, I think companies like IT services, most of the negativity is right now actually in big IT, which are product-based, which are based on, general business growth. IT services, I think, will have a lower rate of growth for sure, will have margin pressure compared to last year, but are in the context of the rest of the market are not particularly more expensive. I mean, they are trading higher than they should, but then so is the rest of the market as well. So from my perspective, I think I would still remain moderately underweight if you really want to take a position which is very sharp. Otherwise, a market position seems to be merited.
They're merging all this in the steel business, Anuj. On the IT side also, will we see? Right? They got Tata Elxsi, they've got TCS.
Yeah.
What else? I mean, I can't think of immediately any other line of businesses where they've got more than one company and eventually, they kind of bring it together.
Actually, that's the biggest risk. For Tata Elxsi, for longest, the only risk is if it gets merged into TCS, because Tata Elxsi has been the most remarkable stock in the mid-cap IT. And, while all the IT stocks have corrected, this one hasn't. I mean, there's still something which is holding, I think, so far high, because it's in artificial intelligence and a couple of other really booming sectors. So you don't want to be merged into something which is growing at 3%, while you yourself are growing in the high double digits. Even
the base, I mean, TCS, of course, I mean, just in terms of sheer absolute revenues, etc., is top of the food chain. So to grow on a base of that will be very different. But even standalone Tata Elxsi, to be the flip side is it's already trading at what, 90 times 1 year forward earnings, 90. So you are paying top dollar for that. But anyway, that's a different debate we are getting into. The question is, will we see this happening with Tata Group companies and other sectors like IT services, etc.? Anand is with us. Anand, hi, good morning. Just a quick word on Fortis with the big correction we've seen. The open offer will not go through. There is a stay. And Ekta was yesterday telling us that will IHH, is it possible they get frustrated and put this asset on the block? We don't know. Those are answers we don't know yet. But the company keeps operating. I mean, the CEO and the managing director who runs the company is appointed by IHH right now. So the operations continue as it is. The stock's down about 14-15%. Would you give it a look, your sense?
Well, obviously, you will only get this because there is a lower valuation only because there is some confusion in terms of ownership and the likely future movement. The key question is whether the company is going to be viable and continue to grow and raise money. If it is able to raise money, I see absolutely no reason. Hospitals are a great place overall. And therefore, given the fact that it is not actually, it's not probably as expensive as some of the frontline ones, there may be some play still there. I don't see any reason why you should be moving out. I think even if the current ownership were to move out, there will always be some other taker for that. So I think so long as the operations behave reasonably and there is no cash flow issues, I think it's a safe place to be.
Okay, so let's do one thing. Let's take a quick commercial break on that note, but lots more coming up on the other side. Mitesh Thakkar and Shrikant Chauhan will join in for some technical trades. Stay tuned.